What's good? What's good? What's good, people, traders, and dedicated gold chasers? Welcome back to the modern day trader channel. And it's a pity we can't do the live stream today. And I actually wanted to pull it up. So let me just do this real quick, guys. Before we actually jump in, let me show you guys why we can't stream. This is the main reason why we can't stream today. We tried our best for the past 20-30 minutes. We've been going at it, trying to go live, and it's just the software that we use. Unfortunately, for some reason, it's experiencing issues, and
You're
yeah,
not
and
just
so we can't
fucking
really.
around.
Yeah, exactly, bro. Fucking hell, it's not the way that we were thinking our stream would go or this would go. But unfortunately, you experience these issues. However, just take it in stride and continue moving and continue doing what we need to do. Anyway,
Oh,
Sam,
what were you showing on
before we go
on
into
your
the
screen,
charts,
Doug?
bro. Oh, you didn't see it, eh? She.
It 0-0, bro.
Uh, let me. I honestly thought you
But
saw
I
it.
think it was basically
Let me share it
it was
again.
basically
Just give me a minute.
a notification.
Yeah, it was the screenshot of the notification just stating, let me just open it again. So it was a screenshot of the notification showing that we can't really live stream due to StreamYard capitulating. Let me just share my screen again. Mm,
Yeah, the right one sharing now.
so there it is. There it is, guys. Yeah, and this is our current video that we're doing right now. Before we jump into the charts, I just wanted to show you guys YouTube is experiencing an issue preventing streams from being created and going live. Our engineers are investigating. So there's nothing that we can really do about this at this current point. It's quite unfortunate. It
Mm.
is what it is. Uh, but yeah, Sam, how's the week been so far? Before we jump into the charts.
Um, it's Yeah, the week's been all right, bro. It was actually a bit of a quiet week before today. No setups Monday, Tuesday. Two setups today though. Today was just a bit of fuckery, bro. I think there's no other way I can put it. You know this. I was sharing it with you. Um, Basically hit 1% drawdown today. As most of you know from my weekly reviews, I'm only taking 0.25% risk per trade. So you guys are obviously saying, geez, Doug, you took 4 L's in a row. Nah, nigga didn't take 4 L's in a row. I only took two trades today. But we just got fucked up by news today, and that's all right.
Hey.
But so basically, what was happening was I was long, I was in two positions, long Euro USD, short GBP JPY. Those pairs, more often than not, trade or are quite heavily correlated with each other. So I'd say 80 to 90% of the time, they're typically trading in alignment. So the fact that I was long one, short the other was a relatively good hedge. We had inflation data out the US coming out this afternoon. So uh, that is a preferable position I'd like to be in if I'm entering, if I'm taking a position in both those pairs, because then it acts as that hedge on either or. Because if I'm trading, if I'm long EU, long GJ, then if I'm right, okay, I'll be right on both pairs. But if I'm wrong, then both pairs are taking L's.
Mm,
So here the data, I knew that look, um, these pairs are probably one's gonna shoot up, one's gonna shoot down, and I'll probably be stopped out of one or the other. That's fine. They were both similar risk to reward ratios, 1:4 on EU, 1:5 on GJ. Euro USD, I was actually at break even, which was better. So technically, my exposure was only 0.25%.
0.25%.
But yeah, we had crazy volume come in at that announcement. I think the inflation came out higher than expected. So the dollar rallied heavily. So EU tumbled. What was supposed to be a break-even result ended up being negative 0.75%. So to put that in retrospect, if I was taking, if I were, if I 1% position on, if I was risking 1%, I would 3% on position that was at break even because of the slippage. That's, for anyone that doesn't know what slippage is, that's basically brokers not being able to fill your order at the point that you set it at. So my stop loss, obviously at break even, they only fulfilled my order at negative 0.75. So took a loss on that. GJ, which tumbled, which I was short in, knocked me out because of spread before it tumbled, and it literally went to TP, which was 1:5 in about 15 minutes, but got knocked out of that because of spread. That happens, spreads widen and during these news events. So yeah, ended up taking a 1% loss, which is also my daily drawdown, something I probably haven't touched in a while. So yeah, it's been an eventful day, bro, to say the least. I think a few lessons taken away from the day. To be honest, wasn't fully confident in the EU before I took it, and the GJ as well. I expected the EU to play out over the GJ, but the opposite happened. But in hindsight, I see now why the EU played out. So yeah, it was not an ideal day, but a day in the office nonetheless. Lessons taken away. I've gotten to the end of my 20 trade data set, so I'll now spend some time tomorrow morning, probably a 2-hour block, like 5:30 to 7:30, just evaluating the past 20 trades, making those minor tweaks. Still am working on that phase 7 plan, kind of like in parallel with that, but yeah, kind of just evaluate at this point and move forward. So very long-winded answer to how's the week been, but I think there was a bit of activity today, bro. So yeah, that's how the week's been. How's the week been on your end, though? Zunga, I know it's been coming through quite nicely, though. Coming through quite nicely, bro.
Was a decent week. Like with regards to trading specifically, started the week off really good. Took 2 trades early in the week. So Monday I took 1 trade. I think it was 1%. And then Tuesday I took another trade that was 2%. So then I came into today up 3%. And there's something that I've noticed in my trading plan that I've been questioning quite a bit is the first 15 minute, like the close, right? I never take trades on the close of a 4H. So if a 15-minute close is my direction, I never take it on the close of a 4H. So at 7 o'clock or 11 o'clock, I'll never take an actual trade at those times because I tend to notice that usually what would happen is that the pair would, or a 4H would usually start with creating a wick, so moving the opposite direction, regardless if the previous candle closed bullish or closed bearish, will usually move in the opposite direction. But what I've started to notice, and I can't make a definitive decision as of yet, as I told you today, Sam, is that the first 15-minute candle is, I think it's kind of the same as the close of a 4H candle, where we could push up, but the chances of the next couple candles coming down is way higher. I'm speaking about in a bullish sense now. If the previous 4H candle closed bullish and the first 15-minute candle pushes bullish immediately, leaving no bottom wick, the chances of price action coming down is higher than it is continuing to push up. And I've just noticed this like over time, because generally what happens if you go over the charts, 80% of the time, most candles have wicks on it, whether it be to the upside or the downside. Now, those wicks generally occurs at the start of the candle. And so just the way the anatomy of a candle happens is that generally in a 4H candle, you'll see the first hour will create the wick, and then the middle 2 hours will then be the body of the candle, and then the last hour will then be the wick in the opposite direction. It's kind of playing into the quarter theory. I don't know if you guys know about that, but that's the way quarterly theory works on the 4H candle. And so just having that theory in the back of my mind and the way my strategy works with specifically with candles, I think I need to take a look into that. Now I'm quite a distance, quite far from being able to make any adjustments to my trading plan. I think I'm currently right now on like 42 or 43 trades. I have 17 trades left to go in this set of or in the sample size. I'm actually on like 47, I think. Still need to record this week's trades. So I'll be on 47 after I'm done recording. And so 13 trades left. But then after that, I'm definitely looking into making those adjustments. Or if it does show that, as you know, we always go based off from sample sizes. But anyway, let me jump straight into the charts and show you guys. So this is the trades that I've taken. I just wanted to show you guys.
Though, bro.
Pardon?
I'm saying that'll be an interesting tweak once you do apply it, or if you see at least over the rest of the set, whether it plays out. Because now you kind of like subconsciously looking out for it, which is really cool to have that like
that's
interval
the thing.
or period of like trades where I'm gonna be adjusting after this amount of trades. But so there's things you kind of pick up that you want to apply, but you don't yet because you're still trading the current plan. So very keen to see how it plays out.
Exactly. So I actually did in my review on Sunday, when I did my review, I did a little analysis on pound yen, and I was calling out longs on pound yen. Let me show you guys. Let me just go to pound yen real quick. So on Sunday, price action was trading around these areas, right, Sam? And this is Friday. This was Friday's close. So price action was trading around these areas. And the reason why I was calling out longs was the fact that if you take a look at, I think it's what we spoke to on Wednesday, is that if you take a look at price action, the way it pushed up, and I remember us anticipating this pullback for a correction, or the correction, in order for a price action to then continue to the upside. And I didn't necessarily see any pullbacks into like these major areas to the downside, just because of the way price action was forming on the 30-minute or lower time frames. At the time, you could see that like when Friday was closing, we had already taken out these higher highs. So in theory, we were forming higher highs and higher lows already when we closed markets, like the markets on Friday. So all I was really doing in anticipation of what could have potentially happened was anticipating that these areas in the market could get filled. And I remember calling out the fact that we could potentially either pull back into 50% of this area, to the 50% area, or into these areas. And what you can see, we capped a little bit, then we pushed to the upside, and I believe that I got in and around these areas. Now going back to the trade, so this was pretty simple. We broke above those areas there. We created an area in the market where we failed to break above for some time. Then we stuck our nose up above these areas here, breaking structure, in my opinion. Now, at this point, usually what I'm looking for buys above the break of this highs. However, as you can see, price action never really broke above these highs. Price action then came back into the point of interest, or what I usually call double bottom. And then you can see that price action had the bullish candle that I look for. And along with that bullish candle, Sam, we had the 1 minute break of structure. I don't know. Oh, yes. Yeah. So we had the 1 minute break of structure to the upside. We had the pullback. So the 15-minute candle closed in and around these areas here. Then the next candle, in the same theory, usually forms the wick to the downside first. This is on the 1 time frame, but this wick that is formed here is usually formed early on in the candle, and that's the same theory that I'm using with the 4H when I'm speaking about my 15-minute theory of not trading early on, right? But anyway, that's just speaking to price action is fractal, and it doesn't matter what time frame it happens on. It happens on every time frame. So we see the pullback, and price action, once it started going up, it just started going up. And then let me just show you guys one more trade, and then I'll jump into the charts. Well, whenever it opens up. Okay, today, let's see. That was Monday, and then I believe Tuesday was a clean trade too. So Tuesday was a clean trade. The difference between this trade and Monday's trade is that we had 4H correlation, as you guys can see. And what that simply means is that price action across all of my pairs on the 4H candle is in the same direction. And what we were looking for here was buys, and really, really simple. It's just a break above an area in the market where price action failed to break above for some time. And then once price action broke above, taking buy stops above 1 minute time frames and placing my stop loss below 1 minute higher lows. And then the rest is history, really. So there's the before, and then there's the after. Now I will record all of these trades in my actual journal. It's just that I haven't recorded it yet because I usually record it on a Friday. Anyway, let's get into the analysis, guys. The price action has moved. What I can say is that based on from last week's analysis, Sam, a lot of our analysis has played out. And I remember calling out these 104 or 112 areas last week, saying that there's a high chance the price action could pull into these areas and then start rejecting from these areas. Now, what you can see is that yes, we had these low liquidity grabs pull back and then push back into the area, and then this big ass push to the upside. Now we are closing in 19 minutes. If we do close above this area, then that just confirms that we are continuing the bullish trend on the day on the DXY. And what that in turn means is that because uh, USD is bullish, we're then looking for sell-offs on EU and on all other pairs that contain USD in the back of the pair. I don't know what you call it, but yeah. So jumping into Euro USD, I didn't really remove any of my analysis from last week just because I think it played out quite clean. You can see that we pulled up into the point of interest that we had marked out. After we did that, now I wasn't anticipating this move to the upside here. What I did anticipate is that like we'll come off from these areas and then we'll pull back. Now there was clean imbalance in and around these areas that was filled. And once these imbalances were filled, you can see that price action, yes, it pushed to the upside, but it never really broke above these areas here. So we failed to break above, failed to make a higher high. And then what you can see is that price action just melted. Now I would like to see that price action breaks below here before anticipating clean sell-offs, and it would be pretty simple. This would be your next point of interest that you'd be looking for. But I don't think price action would come all the way down into there. Let's say, for instance, price action breaks, I'd be anticipating these 50% areas here, where the price action eventually turns down. So yeah, if price action do turn around, yeah, I don't really trust it just because I think that this move right here, this is the origin of the move, and that's where I'm looking for price action to really break structure and see a continuation of the trend to the downside. Jumping into pound yen. Uh okay, these areas are from earlier. Let me just take it off. It's confusing me. If you look at it from a higher time frame perspective, now price action is still bullish. And with the CPI news coming in, what you can really see is the price action pulled. I don't know if you can consider this a correction the way it's moved. It's moved very impulsively to the downside. However, what I would say is that from a 4H perspective, we did not create this higher high. So this really isn't structure from a 4H perspective. And I'm not really going down time frames right now because I want a high time frame perspective moving on for the rest of the week. And I'm using my 4H as a high time frame perspective. Considering that we have 2 more days left in the week, I think the 4H is the best time frame at this current moment. And so what I'm anticipating is for price action really into the to pull back into these points of interest and to see price action shift structure when we do get into the point of interest. And once we can see the shift of structure, then you can really like anticipate continuations. If you don't see the shift of structure and price action just does this, then in my opinion, you need to just stay away from the pair and wait for it to clearly indicate that it's bearish. Because to me, this is a key area in the market at this current moment. And although price action, all of this year, guys, to me, this is my personal opinion. Somebody else might say different. Sam might even say different. To me, everything in this area right here is internal structure. And this is the move that created this high. And this really, everything in this area right here is internal structure. And so what that means is that until price action actually makes a high above here or breaks these areas here, then we have clean price action. But in this area right here, we could really you could trade off from any level, but what you want to do is start to anticipate clear highs or clear lows where price action could potentially bounce off from. Hence, me gravitating or thinking price will gravitate to these areas here. And once price action gets into these areas, to then see a bounce off from these areas. If you don't see a bounce off from it, then I'm going to start shifting my anticipation order flow, being pushing bearish into these areas here, because we do still have these imbalances to fill and we do have these orders to mitigate. So if we do start breaking below here, I anticipate the price action is going to come all the way down into the 189, 850 area. Now jumping into US30, this is actually the cleanest pair in my opinion. Right now we're making clean lower lows, clean lower highs, and clearly what you can clearly see is that all you need to do is start anticipating sells. Unless price action break above these areas, which is 39.050, in and around those areas, if price action does not break above there on the 4H time frame, all you need to do is anticipate continuation of sells. Now, whether you're gonna anticipate break and retest, where you're gonna anticipate retest of the points of interest, really, what it doesn't matter where you anticipate these sells from. I think that you can anticipate sells from any area in and around you. Now, my place where I'd look for sells is really from the point of interest. I know I don't really know this pair too much, but what I can say is that this pair is looking so clean that if we do something like this, to be heavenly. And the only reason why I mentioned break and retest, Sam, is because I've noticed this right here when I was looking at the pair, and was so clean. These break and retest areas here, and then also after last week, because I remember when we were speaking on Wednesday, price action was forming these areas, and I was saying I'd rather wait for the new low to be formed. But once the new low is formed, if I extend these areas here, you can clearly see we had a retest of these areas. So there is a possible opportunity where price action maybe just breaks and retests these areas and then continue, because clearly that's what the pair looks like it likes. But the end of the day, all you need to be able to do is find lower time frame confluences and put those things together. I do anticipate this pair to continue tumbling with USD ZAR. I'm waiting for the break of this highs to confirm that we're back bullish, just because the 4H time frame. Now I'm still on the side that I was last week, Sam, where I was saying that USD ZAR really, I don't really like trading it, and it's still in a place that's really iffy and really touchy. But at the end of the day, it's part of the game. If it is one of your pairs that you're going to trade, you can clearly see that we had an impulsive move. Often in impulsive move, you're going to look for a correction, but you'd like price action to first break structure. And once price action breaks structure, you can clearly look for those buys. So, well, first anticipate the correction. Where do we correct into? Are you going to correct into a point of interest? If so, then the point of interest is more likely than not these areas here. And then you just anticipate where price action could potentially pull back to. But would I really trade this pair? Not at the current moment, just because I'll probably be anticipating strong corrections, and once the correction happens, then I'd start looking for buys. So yeah. So ultimately, let me say I am bullish on DXY pending the close above these areas in the next 11 minutes. I am bearish on EU. I am still bullish on GJ. I'm bearish on US30, and then I am still waiting for the close on USD. So I can't say I'm bullish just yet because we haven't closed above these areas. Yeah, bro.
Not clean, bro. Clean. I
That's
think
about it, bro.
there's little that I disagree with you on. Very little. But let's just pull it up and see. Mm. Yeah, it's funny because last time actually the live there was quite a big move on the Wednesday last week, but I think we had What was the news announcement last week? I think it was non-farm. It was employment data.
Yeah,
Employment
the
data. So I
employment
mean,
dot.
we've had
Hey, but
two
I did the
Wednesdays
most
of
today.
high impact news. So
Mm,
not surprised. Yeah, no, it did move the market. So yeah, similarly on dollar index, I was bearish to be honest, just because we had this shift here, high time frame at least. I think this week I was seeing the bullish move, but bearish because we had that break there. And then when we came back up to test these areas, the reason I'd marked this as a bearish move was because the bullish push into the area failed to close above there. And then when we opened on the next day, we opened with a gap to the upside and then immediately filled it. So I counted this as a bearish move still, pending the break of this level here. But what we had on the daily was obviously a strong level, and we were continuously failing to break that to the downside. So not really surprised at this push, quite impulsively to the upside. We have uh, achieved those equal highs, created quite a bit of imbalance. So naturally, I think seeing a correction, and I think obviously the more this corrects, this is just trading sideways now to, I think, eventually break to the upside or potentially double top that will fail to break again in this
mm,
area, and then we could see a more defined sell-off. So I think after these impulsive moves, I like to sit on my hands a bit just to see what the market is doing. Obviously, the signs are in terms of yeah. Just not trying to jump the gun a bit too much.
mm,
So been bearish. I think just looking at the daily first, actually looking at the daily. Uh, I think the wrong daily high value area because I had this point marked up out here as my high value area where I saw price gravitating towards. But what we did have was this point here in the market where we rejected quite strongly off from last week. We failed to break that level. And then again, yesterday's close was similar to this candlestick, but we had just gone deeper, I think, into this liquidity pool above here and failed to close above there again, forming the same doji candle. So I think from yesterday's daily close, there was already sort of signs that we're struggling in this area, and price is
mm,
probably going to move to the downside. And then, yeah, just looking at the 4 hour, we had that push up uh, accumulation, and then we manipulated to the upside, and then clear 4 hour rejection again from that area, and then another accumulation before testing again that daily high value area that we closed below, and then obviously the distribution to the downside. So yeah, I think this one in hindsight was quite clear that it was pushing to the downside. Probably just a gap in analysis on my part on that, with looking for that those buys at least. So yeah, but I mean, this has shifted lower. Um, like I said, from a daily perspective, we are trading lows. I think in alignment with what you're saying, Marcy, I am seeing these lows sort of being run. We have respected it quite a bit the last time we were in this area. But yeah, with this level of momentum, obviously it remains to be seen. I would like to see preferably a daily close below this level. But seeing as we did shift out that area, we've corrected, we've pulled back, rejected from a daily level, and now we're pushing lower. I do think we're going to see potentially a continuation to the downside. Um, but again, 4 hours shifted, it's bearish. We look for the correction and then continuation lower to the downside. Will it reach all the way up here? Remains to be seen. It may not. But we'll be looking for, I guess, the continuation confirmation to the downside when it's ready to keep going. And we'll from wherever. So definitely bearish on Euro USD. But again, I think we start to play out at these levels here because I think there may be an initial reaction from here before we do start uh, pushing up higher. But then the extent of that push could just see that begin to trade high
Potentially break.
because this is quite a strong level that has that price has failed to break in the past. USD ZAR, I think my watch list is just a bit mixed up. USD ZAR though, this is trading quite nicely on the daily. We obviously broken this level, just following the structure. As you can see, low, low, lower, high, form that lower low with the daily close. But again, we are at a bit of a critical level on this pair. You see, I have that daily high value area, but I've taken a bit back. You can see this is a point where price has failed again to break low for quite some time. We did get our first daily close below that level with this candlestick here. So signs that price may be penetrating and heading lower. But again, I think just looking at the 4 hour to give signs on whether we are continuing to the downside or will begin to shift structure and push to the upside. At the moment, we haven't gotten a break above the structural level yet. Tested it, but haven't closed. And so I'll be looking at how this candlestick closes here. Daily is looking very bearish, but again, if we struggle to close above there on the 4 hour, then I think the bearish sentiment at least will reign and will start to trade lower. So yeah, we could see that, I guess, in alignment with dollar index correcting lower after that massive impulse to the upside, as well as then Euro USD starting to correct higher off the back of that bearish push lower. So I think for the rest of the week, we could see this potentially come to the downside. So this is a pair that I think I'll be keeping quite a close eye on because it didn't move as much as other pairs. I think at the open today, we got a strong move to the upside, I think ahead of that inflation data, but I think that was more Rand linked. I don't think it was dollar related. I think the big news on our end was that the MK obviously won their court ruling, their court case, against IEC, overturning the IEC's ruling. So I think the market maybe, I don't think MK is seen positively in the media, to be honest. So I think that was seen from a bit of a dovish sort of perspective, or there was a dovish tone on that, because now they will, well, Zuma at least will be able to contest, will be able to be involved in parliament. So I think the Rand weakened off the back of that at the open. But I mean, even with the inflation data, we didn't see this move as much as the other pairs. So yeah, this is actually holding, maintain structure, and then look for confirmation to the downside. So yeah, your is a favorite. Is a favorite. Pound JPY. Similarly to you, seeing this as bullish. Structures creating clear high highs, high lows, high highs. And again, we are trapped, I think, within this range here, like you pointed out rightly so, Marcy. We haven't really mitigated any 4 hour POIs or anything. And I think when price starts to do this and we start to sort of trade within a 4 hour range, for me, what I've noticed, one of two things happens. I think one, price gets very messy, and it's better to take a step away from the pair, because then we're kind of just consolidating without real structure. Or two, we begin to form structure within structure. which I think is what is happening now. This was never really a very strong POI. I think we obviously had a significant move out this level, but a large portion of this distribution to the upside has been mitigated. And then price has started to move higher with structure, which I do like. Let's just do this now. Price has started to move higher. And so moving higher, like you mentioned, we never really got into that might have been with EU, but yeah, with GJ, I mean, sorry, um, we formed the structure here with this POI to really break higher off the back of this pullback, and we have shifted to the downside. I think it's just clear on the lower time frames. So we do have this point of interest here that I think price is heading into. I think it'll be interesting if we don't mitigate this POI before we start to correct higher on these lower time frames, which I think are just a bit clearer on the 2 hour. Because I think for me that will be a strong confluence that we are in fact coming down into this POI at some point, and it just gives a lot more conviction to the bearish move down into that level. It makes this leg a whole lot more corrective if we do get that, and then it adds confluence to this push potentially to the upside because now we have a bit more of a developed correction. So, bit of a method in the madness, I think, with GJ's correction. And yeah, again, keeping a close eye on this, I think, with the USDs just to see how it plays out. And then US 30, yeah. Very clean pair. I like that we are really challenging this daily area. A lot of momentum. Preferably we close like this. And if we do, I think that is a very clear sign that we may get a decent sell-off on equities. So yeah, keeping a close eye on this. We close on the daily today. 4 hour structures pretty clear. We've been trending lower quite nicely. You can see which direction the momentum's in, which is nice. And yeah, again, just looking for, like Mark, that correction higher into this POI, fill that imbalance. We've got good confluence with imbalance there, and then looking for this to continue lower. So effectively same dollar index, looking for that to correct, I think, for the rest of the week. Euro USD, looking for that to correct as well, a bit higher. So potential counter trend positions, but I don't think, yeah, I don't think it's something that I'll be very focused on just because we are at those daily levels where, yeah, price tends to get a bit messy. But what I am liking is USDZAR for those shorts, we've respected structure, as well as GBP JPY, potential counter trend play with that 2 hour structure coming to the downside, but then as well the 4 hour structure that we've established within another 4 hour structure and never tested for potential move back higher. So keeping an eye on that, and then yeah, US 30 as that last move. So that is what the
That is
setups
it.
are looking like.
Yeah, it's looking clean, bro. I'm not gonna lie. I'm looking at your screen right now, and I'm seeing
Am I
US
having
30, and this thing is looking like one of them things that you'll find in a textbook where they're speaking about trending pairs, bro. Like Dead ass. This thing you'll find somewhere on Baby Pips or in somebody's cause where they're telling you this is how break and retest work, or this is like how you need to trade fibs, or you know what I mean, like the perfect structure, bro. Like Batsy breakout, you get a low, then you get a lower high, you get a lower low, you get a retest of your previous lower high, and then you see lower time frame structure
Oh,
continue to the downside to enter. Hey, it's just moving mad, bro. I'm not gonna lie. Like US 30 is just looking so clean for next week, bro. Looking so clean. Or not for next
yeah.
week, for the rest of the week at least. Sorry, pardon, for the rest of the week. Now you also need to bear in mind that we still have PPI and unemployment claims for the rest of the week too, bro. So just just know that it gets a bit tricky for like for USD pairs moving forward. So yeah, just know, keep that in mind, guys. Keep in mind that keep in mind that all the USD pairs are really going to be moving mad tomorrow too. Tomorrow's Thursday. We have some PPI, some unemployment claims, and then on Friday we have pound GDP. So there's going to be a lot of movement for all the pairs really that we did analysis on. So yeah, yeah. But what you saying, Sam? How are you feeling for the rest of the week? Eh?
Nah, feeling good, bro. Bit of a slip up today, just with some of the news that came out, but it is what it is. I think it was just a good reminder. I think coming to the end of the data set that you know, sometimes I lowered my risk for a reason. Um, Initially, when I made that decision to only take obviously 0.25% per trade, and that's it kept me in the game. On a different day, if I'd over leveraged, I wouldn't have no account because that slippage would have led to me breaching obviously my rules. So yeah, risk management is still key, I think, and still a focus for me, I think, in this next sort of set. But yeah, just looking forward to I think what the market has to offer for the rest of the week. And yeah, it was a live stream, but we hope you guys enjoyed this episode. A lot of setups, I think, to capitalize on for the rest of the week. So yeah, stay sharp, and yeah, just check out. Be sure to catch the reviews at the end of this week just to see how this analysis plays out, and yeah, if it respects what we're saying. But yeah, that I think that is all for today. And I think, as always, don't forget, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.